Thanks for making it to this Celeste stage and joining us for this panel. I'm Lydia. I lead Corp Dev and the Blizzard Avalanche Ecosystem Fund at Ava Labs. I'm going to let all of our amazing panelists introduce themselves and talk a little bit about what they're doing, what they're building. So Connor, why don't you take us away?
Connor Dougherty, formed Valinor Group, an investment firm earlier this year. I have a traditional finance background. I was an investor in the credit business at Blackstone for a number of years. And we're really trying to bring that toolkit, that private credit background to the crypto space, and I'm excited to be talking with these folks who are, working on something very exciting to us and at Valinor, which is kind of bringing on-chain credit to bear. So,
great, thanks. I'm Karn. I'm the CEO of Re. We're an on-chain reinsurance company, so you can think about us as an insurer for other insurance companies. The crypto analog is real-world restaking. If you believe stables continue to pick up traction, tokenized treasuries, tokenized money market funds, you can now pledge these assets to a global capital lake that can support any insurance company in the world. So our goal is to bolster global insurance capacity. Eventually, we can secure any business that requires security collateral in the real-world context. Before this, I built Cover out of Y Combinator. So I built a national insurance company, and before that, a business that ended up at Shopify. So it's early there.
Hi, I'm Andrew Bruce. I'm the founder of FIZIT. We're using blockchain to record the system of record for industrial transactions so that we can reduce the payment cycle for industrial payments from what it typically is today, 90, 120 days to daily. So making an industrial transaction just like buying gas at a gas station.
I'm Farhad, co-founder of Trensi. We are an interoperability company working and aiming towards solving cross-border payment solutions, basically connecting Web 2 and Web 3 in a way that hasn't been done before and solving cross-border payment flows.
All right, thanks, guys. You guys bring all different types of expertise to specialty finance, and let's dive deep. I think for a lot of us, the term specialty finance can be a very vague and broad term, and I think Connor, would you mind helping us all better understand? It covers a lot of different industries, a lot of different asset types. What do you think is kind of, how would you explain it, to someone who's new to very bespoke financial products?
Yeah, I agree. It definitely can be confusing, and there's a bunch of definitions out there. So I'll try to do my best to make it a little bit more digestible. The way I think about it, it's really either the ownership of or lending secured by kind of a pool of financial or real assets, with some associated contractual cash flow. That's kind of opposed, or a lot of people think about lending as like a business loan or a corporate loan. And so some examples, there's consumer examples that would be like credit card receivables. There's non-consumer examples that are like pool of aircraft leases, or some more niche ones like music royalties. So I think it really goes to gambit, and a lot of these just power kind of the real economy.
Just to provide a little bit of context about the size of the different industries, like what would you rank as like the top 3 industries by either like asset value? Or,
the by and far and I have a U.S. bias, but and the asset-backed market is pretty robust in the U.S. But I think, and some of you will know this from the crisis, but the largest is kind of mortgages and collateralized mortgages. But there's just a number of others, credit card receivables being a very large market, auto loan, pooling auto loans also being a very large market. So there's a number of very, very, very big, the TAM is massive. And I think, each of these guys are working on a different niche, but, I think the goal here is for all these to come online, on-chain, yeah.
Yeah, I would love to ask, each one of you, what you're building and what part of the specialty finance market you're bringing online through each of your projects, like Re, FIZIT, and Trensi. Would love to hear how you guys are leveraging blockchain.
Yeah, I'm happy to kick that off. Look, my product at the end of the day is a promise to pay in the case that a certain set of things happen. So the business is basically make a promise, prove that I can pay. If something happens, pay out, otherwise collect coin. And I sell an intangible good. which is effectively a contract that coordinates obligors, obligees, and the conditions under which there are payouts in a multi-trillion-dollar market, right? And so being able to coordinate amongst these counterparties from the policyholder all the way to the risk bearer is something that is much easier to do on chain on the outward face of it. And practically, because of how intermediated the space is and because how much money is in this space, has been chock full of intermediaries who have kind of taken a piece of the pie and made themselves very well ingrained. But has opened up pretty significant opportunity for us to just create a dramatically more efficient reinsurer and insurance market, even cutting a couple of points away from the pie is a massive, massive opportunity for us. So. We're only 8 people. We're probably, our goal is to end the year at $250 million in premium, dramatically profitable. It's just not something that would otherwise be happening if we didn't have the types of efficiencies that we could garner on chain.
Yeah, just to dive a little bit deeper, are there any numbers or any data points that you can point us to what are those efficiencies, like the magnitude of the efficiencies of bringing reinsurance on chain?
Yeah, so if I can cut away, let's just assume that I am a market, like it's 8 people, we're never going to be able to out-underwrite the most sophisticated actors in the world, right? So you just take the beta of the market and you take the average result, assume that we're price follow and we just get the results that everybody else gets. If you can cut away a couple points, say 2 or 3 points of administrative overhead, that's nearly a third of the economics in the reinsurance business, right? And so that's massive, especially as you start to compound that over multi-billion-dollar books. And it gives you a couple of options. Effectively, you can be much more price competitive when you're selling insurance to insurance companies, or you internalize those profits and you redeploy them in increasingly creating a more efficient market, or starting to build software that facilitates much deeper integrations into insurance companies. Like, my vision for the future is a global capital lake that any insurance carrier in the world or reinsurer in the world can access trivially through a software layer and an underwriting layer. And then eventually, you spin up hundreds of insurance companies that are purpose-built from selling an insurance policy for whatever line of business that integrates seamlessly with this global capital lake. So full resolution in underwriting and pricing from the origination of that policy all the way to whomever is taking the risk. That is a relatively big vision, right? It is a multi-trillion-dollar vision. And I think even just getting started along the path of compounding slightly more efficiently gives us a leg up. It doesn't take a lot, but it does get pretty big pretty fast.
Yeah, and so do you don't mind diving a little bit deeper into what pieces of the capital lake that you're building exist on chain and how that really optimizes the current workflows of reinsurance?
Yeah. So again, my product is literally a contract, right? It says I am going to step in under certain circumstances and provide the collateral to an insurance company that has had adverse results in a particular direction. Otherwise, I'm going to get paid, right? And so you think about who we're contracting with. It is a couple of folks, right? It is like the reinsurance broker that helped originate the business. It's the insurance company themselves. We need to be able to get data on a monthly basis around what policies have been sold, the premium collected, the claims that have been paid. All of that should just exist in a standardized format that's available in a single view to every counterparty of this contract, right? So in insurance, in much of financial services, especially where you have significant intermediation, the resolution of data falls off dramatically from wherever you've sold something like an insurance policy to whomever is ultimately underwriting it. It just gets aggregated and sanitized from spreadsheet to PDF, from hand to hand. There's a world here where every counterparty has the same view, and you've cut away, Munich Re or Swiss Re, the 50,000 people they employ, maybe 30,000 of those are simply doing contract reconciliation and looking for any sort of long tail risks in a bunch of PDFs. All of that stuff goes away. And so it's a dramatic drive towards efficiency. It is simply turning a traditional insurance contract into a smart contract. and having the parties coordinate that way, right? So data goes on chain, results go on chain. The world knows exactly what risks you're on, and exactly what capital you have at any given point in time.
Wow, yeah, that's a lot of transparency for a value chain right now that kind of doesn't have the same access to data across the industry that serves insurance and reinsurance. So thanks. Andrew, I think very different industry and also, but similar efficiencies, right, that can be realized by being on chain. So please tell us, a little bit about FIZIT and all kind of the same questions to you.
I'm really excited about what you're doing. It's really cool. By the way, who is going to win an election? Sorry, we were joking earlier on about the questions we were going to ask each other. One of them was who's going to win the election and what's the impact going to be, and I'm not going to answer that. So why blockchain? I didn't want to be in the blockchain business. I thought it was a stupid idea, and I told everybody it was a stupid idea. I come from the drilling business, oil and gas drilling, and you can't get further away from blockchain than oil and gas drilling. But I was working with, a multinational oil and gas company, and they said that if they could improve this one KPI for performance by 1 minute, they could save $250 million a year, which even for them is a number that's worth chasing. And I'd come from my background as improving performance of drilling rigs. So it's like, well, why on earth are you not doing it? And they said, well, the drilling contractors who own the rigs won't work with us. So I went to talk to the drilling contractors, and I said, hey guys, why won't you do this? And they said, quote, we don't trust the bastards. They said, what we're going to do is we're going to negotiate a performance contract, which isn't going to mean that we have a discount in our day rate with a performance bonus, but they will always find a reason not to pay the bonus. So we won't do it. My friend working at Microsoft had asked me about blockchain and all this other stuff, and I told him it was a bunch of crap. But I started thinking about it, and exactly like you just said, a smart contract is just the encapsulation of the commercial terms between the buyer and the seller. And we can get data straight off the rig, or it doesn't have to be a rig, it could be a piece of farm equipment, it could be a mining equipment, it could be any industrial IoT data. And as long as you go to the operation, you can go to the operation and say, okay, I'm going to use the data from the operation to trigger the smart contract. And then I'm going to put the results in a blockchain so that the buyers and the sellers and all the different people down the, sorry, I don't mean to smack you in the face, all the people in the supply chain have got visibility into the transactions. And we worked with a consortium of multinational oil and gas companies. It's a blockchain organization called B3, Blockchain for Energy. And we had to go through a massive amount of due diligence as to what comprises a legally enforceable smart contract. And I'll save you $20,000 worth of consulting. The answer is this. You have to have an irrevocable tie between the legal contract between the buyer and the seller and the smart contract that implements the intent of the legal contract. And then for every single transaction, you need the data that was used to trigger the transaction and the results of the transaction, and all of that has to be on chain. And that provides a chain of custody that if you end up in a case of a lawsuit, then you can defend why the transaction was paid. So I presented this to a bunch of rednecks in steel-toed boots and spit cups, and you can imagine how embarrassing that was, talking about blockchain. And then at a conference a while later, I was presenting this idea of how to automate performance contracts, and they said, well, if you can do it for a performance contract, you can actually do it for any contract. So was steel delivered? Did people get on the rig? Was sand delivered? Whatever it is, as long as you can measure electronically from the operation, then you can confirm that the transaction happened, and then you can use that to automate a payment, and then some magic starts happening.
So there are a lot of different things, obviously, with drilling and just with oil and gas as an industry overall. So, in your first go-to-market product, what did you see as kind of like the best place to leverage blockchain and start putting these assets on chain? Like, what is the first product that you're working on?
It's actually embarrassing because there are so many. There are so many applications for it, right? Yeah. So you can use it for drilling performance. You can use it for diesel fuel delivery. but just basically anything, as long as it can be measured electronically. So you have to be market-led, in my opinion. And that's where, if the customers say, at this point, we've proven that the technology works at scale with multinational companies, and it's really a matter of what problem is the customer trying to solve. I think we're going to get into change management a little bit, and that's the real challenge: is how do you deal with the change management issues with these large companies, and that's a real challenge.
All right, Farhad, we're gonna switch gears a little bit to Trensi. A little bit different, but tell us about what you're doing and how it enables everything that we've actually already kind of mentioned.
Yeah, sure thing. So I'm going to try to speak human here, break this down very much. So we're in the cross-border payment industry, and we basically work with a bunch of global payment flows. When stablecoins came out, we were super excited, and we saw that this is a perfect way for settlements to happen instantly. But we actually, when we went deeper down into this, we saw that it didn't solve that much problem. It actually solved one problem and created another problem, because the guys receiving the stable coins couldn't use that for FX to fill up their local liquidity pool to do payouts tomorrow or next week. And we saw that the actual distort between Web3 and Web2 was huge still with stable coins. And we started creating this interoperability protocol, basically allowing everything that happens on-chain also happening within these global banking rails. So using smart contracts to do lending facilities, to do settlement facilities, but once they use those smart contracts, the money actually flows within their bank accounts that they're already sitting on, allowing us to remove the fragmentation of traditional finance in terms of manual processes and calling the bank and say, hey, can I get money from one account to another if it's a Saturday or a red day? So we were really leveraging blockchain to use the transparency, the speed, the settlement of it, but we're interconnecting that to actual global payment flows, building products and services around that. And one of our products around that is a pre-funding product where we provide liquidity for cross-border payment companies. Their biggest hurdle is having the money at the right time at the right place. If I'm trying to settle with somebody in Argentina, the money has to be in Argentina for us to be able to use that capital. If we do a SWIFT transaction and that money arrives in 5 days, I don't know what the Argentinian currency would cost me in 5 days. So it basically creates this bunch of hurdle, and the pre-funding model itself is $4 trillion a day. So at any given day, there's approximately $4 trillion within these accounts. So this is what the cross-border payment flow is using to settle with each other. We're basically trying to automate that and go in and provide liquidity where is needed, using the best of both worlds, of blockchain and traditional finance, and connecting those two.
Wow, $4 trillion a day already, right now. All right. So I think if I could just kind of talk very high level, right? We're talking about improving efficiencies and processes, but also capital efficiency. Like I think everything that all of you are building, it's really allowing the companies, the enterprises who have to do some sort of payment, use some sort of leverage, it allows them to be able to use their own capital pools much more efficiently. So these all sound, like why wouldn't anyone want to do this? So my next question, I guess, and this is open to everybody, like it sounds very simple, and why wouldn't the industry, all industries want to do this right away? So can you all talk to some of the challenges with penetration, with distribution, and effectively your go-to-market? Like what are the obstacles currently?
Should I start? So in our space, it's mainly two things. The first thing is uncertainty in terms of regulations, right? We don't know where we will end up. We don't know where we really are. Nobody's giving us the right answers or straight answers. And the operations in cross-border payments are so big, meaning if we ask them to change the way they operate, that's a big ask at this stage. Until everything in this chain of command or this chain of links is done, it's a very big ask to ask them to change their total operations. So our idea was pretty basic. We go to them. So by the interoperability, we don't change the way they operate because we connect to their bank accounts. We give them the access to blockchain and smart contracts to fulfill any type of settlements. But the biggest hurdle is this uncertainty in the market and changing the operations. And depending on how big those operations are, in insurance also, the bigger the operation, the harder it is to get them to change.
Yeah, that's exactly right. I mean, all the businesses here make money, right? Like these are profitable compounding entities that have been durable. Now you go to an executive who is relatively comfortable in whatever context, already making money, and you ask them to take undue risk with the uncertain reward. It's very unclear to them what the payoff is going to look like. And in the insurance business, look, like everyone's retiring in the next 10 years, right? Like they're mostly off golfing. I operate in an extremely conservative environment amongst conservative actors in a highly regulated context. And so, you can't rely on behavior change. Their behavior is not going to change. And so you have to build software that accommodates the way that they operate today as kind of like a translation layer between what we're attempting to build on the efficiency front and the transparency front and how they conduct business today. And that's exactly what my pitch is, right? It's like, hey, we're going to meet you from a capital and data standpoint where you currently are. We're not going to ask you to change how you do business. My job is to prove that I have collateral that's available whenever you need it, in the case that you do need it. By the way, here's the cleanest way to do it. It's cryptographically verifiable, that you have cash that's accessible to you in a way that is more transparent than anything else that exists, right? You don't even need to think about it. It's just there. You have a computer, you can prove it out, right? By the way, again, you can send me CSVs. I'll translate those into a standardized format. You don't need to do any work. They tend to like that. The entire premise behind insurance is, again, prove that you can pay, be transparent around it. That works. On the crypto front, I mean, clearly, like I'm talking about insurance. I'm not talking about the sexiest thing in the world, right? But it is economic security as a service. And quite frankly, if you look under the hood of practically any infrastructure project in crypto, these are all quite literally insurance protocols. You're holding these assets, these native assets that are being used as security collateral to validate blockchains. You think about restaking in this context, it's exactly the same thing. You take an underlying asset, and now you're using it as economic security as a service to validate a whole bunch of AVSs. Insurance is absolutely not different from that, right? You're just taking stables, tokenized treasuries, other high-quality assets to earn a return, and you're pledging them to real-world businesses like insurance companies or any business that requires a letter of credit that pays you for that security collateral, and you just redistribute those economics to the underlying holders, right? So the crypto part is like there's a lack of domain expertise, and then the insurance part, there's like a little bit of a lack of bravery and a little bit of we don't care because we're making coin, right? And you bring those two together, and it's super opportunistic for me as somebody who sits at the intersection of both of these things and understands both of these things. So.
You can help everybody make coin. Come on. Andrew, if you want to dive a little.
Yeah, it's basically what these guys both said. It's the status quo is easy. I mean, the older guys are retiring, and why would they risk making a change? There's a lot. I mean, if you think of, a large corporation, they've got years and years, decades of systems built up around, I'm going to sign a piece of paper and I'm going to approve it, and then I'm going to give it to you and you're going to sign it. Then we're each going to enter it into our ERP systems, and then it's going to go through the whole chain of approval to be able to get the transaction approved. That's the way corporations are designed around approving that process. And for us to come in and say, by the way, that's all going away, you don't need any of that, is a bit of a mind-blowing experience for them. So this is the second company. The first company, we were trying to sell the technology piece of it. The other piece of it, I don't know if you've experienced this, but you're also proving how badly they suck, which they don't like. Because you're saying, you can reduce the processing expense of paying your invoices. This whole supply chain can be reduced by 20%. You can cut the cost of your suppliers is typically in the range of 30% fraud. So when you cut the fraud out, you cut the reconciliation process out, you cut a massive amount of the inefficiency out of the business, and you start showing this to people, and they go, well, don't tell my boss that. Why don't you please go away and don't talk about this again? So I'm interested in what you just said, because now we're in the process of selling money. Rather than trying to say, here's how we can make your processes more efficient, we're not trying to do that anymore. We're just trying to say, look, if you get immediate payment for your goods or services, then you can realize a 3 to 4 times monthly revenue in free cash flow that you can realize. So you talk to them about money and how quickly they can get it with a minimum change in their existing processes. So it's all about talking about money. It's a lot easier than trying to sell technology and process change.
Thanks, guys. So Connor, after hearing, these are all great operators, and they're building these products to help existing enterprise customers, but also other investors who would be on the other side, buying the products and investing. So, can you give us your perspective on what it's been like having conversations with other investors and folks in the industry?
Yeah, definitely. I think just piggybacking on something that I think is important, though, on the challenges that they're illuminating. I think there's also a component of scale. Like, all the counterparties that they're dealing with are very large. And so a lot of the technology gains and improvements and efficiency, all that, they understand that. I believe they understand that. But it's got to be at a level of scale that matters to them. And because it just doesn't really move the needle, right? And so I think that's where the supply side really gets important, what you're talking about, the investor side, right? Because they really, on the other side of their business, they really need capital where it starts to matter to their counterparties. And I think that's the journey that's challenging for early originators. And it's not just, these Web3 businesses. I mean, this has been a phenomenon for all fintech originators really when they're getting started, right? Because they're like, this is what I want to do. And then they go to the investor side and it's like, this is what I want to do. And the investor's like, well, come talk to me when you have like a year's worth of origination history or a year's worth of, 100 million plus of capital. I mean, that's all de-risking elements for an investor. So that's where Valinor, what we're really trying to do is kind of, get ahead of that and help businesses like these on the stage on that scaling journey, because really all their end states are really scaled end states, right? That's where it becomes very powerful. And it's, I think when you talk to investors, the biggest challenge, especially institutional investors, is there's just the return on time is not high enough yet for them to resource like a $5 million or a $10 million facility. And there's actually a lot more risk associated with doing something that small and at the stage of these businesses. So, I mean, we're trying to roll our sleeves up to do it, but I also understand why most people are like, that the return on time equation is really tough because it is challenging. And so I think that's kind of some high-level perspectives on that.
Yeah, I think scale is ultimately one of the challenges for everybody building, not just in Web3, just kind of any tech startup. So on the topic of scale, and I think it's interesting that we have, 2 vertically integrated businesses and then cross-border payments, which can really enable a lot of everything that's happening. Has being vertically integrated helped with your go-to-market, or do you think scaling would be easier as a horizontal platform? And I'm, for anybody to take, I'm very curious about, the executive decisions that go into building a new company, and also what works with the supply side.
Go first. Jeffrey Moore wrote a book called Crossing the Chasm. You have to have a self-referencing ecosystem, and I'm sure the other industries are the same. But the drillers are like lemmings. If there's any drillers in here, I apologize. But they, if it works for one, it's going to work for all of them. And so, you go first, you go first, you go first. And there's a lot of, getting to the edge and seeing who's going to jump off. So having a self-referencing market, I think, is tremendously important. We did a huge amount of research into other industries which were adjacent. So like any other extraction business, like mining, agriculture. We actually got into commercial real estate. But each of them has got a unique twist or angle on how they want to implement these efficiencies that can be gained. And they all think they are a unique snowflake. And so you have to talk to them in their own language, otherwise they think you're a moron and you don't know what the heck you're doing. So it's part of the value that we bring in our company is I can go and swear and spit with the drillers, and I can speak driller, but I can't speak agriculture language. So you have to go and find the people who can speak that language. The underlying technology, underlying philosophy is exactly the same. It doesn't change. It's how you speak to the people who are the customers, because you have to speak driller. Otherwise, they just tell you to go away.
Yeah, so I have a very purposeful vector of attack, right? It is, hey, I am going to go stand up a reinsurer, a regulated entity. I'm going to prove out that I can create an incredibly high operating leverage entity that can outperform just about any other reinsurer at scale. And I'm going to do that in a software-enabled way, and then eventually enable others to use that software to be able to underwrite all sorts of unique risks in a sophisticated manner around the world, right? I'm, again, building plumbing, but have started with the path of, I like money and I want to make money. So I'm going to go ahead and build this thing and make money to give myself optionality to go and do the more horizontal thing over time with credibility, with scale, right? Would I have preferred just being a pure software business? To some extent, yes, as a technologist. But the reality is the sales cycles, the ability to build the credibility and to move past the hand waviness of, hey, what we're building is actually better. It's tough. It takes a long time, takes a lot of capital, takes a lot of energy. I prefer just to do it this way.
Totally agree with what both gentlemen said. And a lot was, well, you said it's a lot about speaking more than one language, because you're in different type of industries. If we go into cross-border payment industry and we start to talk about blockchain and smart contracts, they would just leave out the door. So we really need to get it to them in a way that they would understand it. And we need to integrate it with them in a way that they can use it, and it's already attached to their existing operation. So being spread out in several industries and being able to speak the different languages in those industries and making sure that the message comes out in the way you want it for this specific industry, it's a very important thing, scaling on it.
I mean, from an investor perspective, I think verticalization is very important. Because at the end of the day, like, all three of these businesses are risk businesses, right? They're underwriting risk and they're trying to distribute it on a blockchain, but they're risk businesses, and if you don't understand what you're underwriting or what you're trying to bring on chain, I mean, like, I think it falls down a little bit. From my perspective, like, it's really challenging to just be, say you're a technology provider and you're kind of, asset origination agnostic. Like, I think we're going to learn over time that doesn't really pair. But
I can actually give an example of that.
Oh, please do.
So Diamond Offshore was one of my first customers. They're an offshore driller. And we showed up and we were talking about drill pipe connections and how you prove that a drill pipe connection has happened, and we can go into that in detail, but it's boring. And he said, I can't swear, can I? I won't say what he said.
I think we're all adults here, right?
Because drillers swear a lot. He said, thank God you're here, because those morons from the company that was here before you with the kind of a blue logo and three syllables. So they had a very, very pretty girl with a short skirt, and she didn't know a bloody thing about drilling. And so I much prefer to look at her than you, but at least you speak my language, so I don't have to try and educate you on how the hell we do our business. So you get the contract and she doesn't. So, I mean, I'm not a pretty girl, clearly. But it's important to be able to speak the language of the domain that you're focusing on. Like I said, the underlying technology doesn't change at all. We're all using blockchain, we're all using smart contracts. But you have to be able to speak the domain language in a way that your customers understand it, otherwise you're wasting your time.
Yeah, thanks, guys. I know this was leveraging blockchain to capture the specialty finance market, but I really appreciate all of the insight into how to go to market, because I think everybody understands the efficiencies that blockchain introduces. I didn't want to spend 40 minutes talking about that ad nauseum, but can't not talk about it. So part of the evolution I think we want to see in bringing traditional financial assets on chain is how they also fit into the existing DeFi protocols or the existing on-chain ecosystem. And so, combining that with how you also see the longer-term end state for specialty finance on chain. I mean, wanted to see how you guys see each of your own projects, each of your own companies really fit in and bring I think, TradFi into DeFi and vice versa.
I'll start out. So I think a lot of that would be looking at how they're currently operating this within traditional finance. If we look at us, we're looking at creating this tokenized debt instrument, but getting a credit rating on them actually to bring it onto DeFi. And it's a real world asset because we're funding cross-border payments, right? And we're doing that through financial institutions. It has to get closer to what's the common norm today within traditional finance, at least so they can understand the product in a way. So getting it onto DeFi, I think, is looking at a lot of how does traditional finance work today, how close can we get, but still leverage everything we can leverage out of the blockchain component of it. So for us internally, that's exactly the process we're looking at. How do we get these products to look like products that they would know and they would understand, and then how do we get it out to market?
Awesome. So Karn, when can I invest in your reinsurance fund and then use it as collateral?
So you can't do the second part yet, but you can certainly be the insurance company today. A permissionless version of RE is going to be showing up, so you can do a lot of the fun things in DeFi. But I wanted to answer your question about like DeFi meeting TradFi. The end state is they're the same thing, right? Like DeFi in its current incarnation. Like if you know Mike at EtherFi, he's like very pointed about this. It's like DeFi is basically this negative sum game. It's like a high roller casino where folks are speculating, and it's a mass, like a vanishingly small number of people who are actually active in it. It's like 2,000 whales. It's like maybe four. Yeah.
Yeah, I would say that, you know, my 2,000 whale friends over there are taking some slight offense here, but no, to your point, yes.
But like 400,000 active users, and then like the Web 2 context, that's like a tiny consumer app, right? In order to onboard hundreds of millions of policyholders from around the world that now have like a actively verifiable on-chain policy or accruing value by participating in these grand mutuals where people are self-insuring, like that will eventually happen, right? And I think these unique structures that mimic to some extent the economics and the workflows that exist in broader TradFi will find their way on chain. Is it attractive in the context of the DeFi casino today, where you can earn 100% APYs in very thin markets, speculating on non-value generating assets? No, right? But where you see RWAs and you see stuff like what we're doing start to be super attractive is like we're unlocking access to massive, massive markets and democratizing this access, right? And that may be a bear market business, but it is a business that will find its way on chain, and will enable access to everybody in this room to be able to.
How big is reinsurance?
Reinsurance is $1 trillion annually. Insurance itself is $7 trillion. Trade finance is what, like another $3.5 trillion, and there's letters of credit. We're talking about massive sums of money, like orders of magnitude larger than crypto.
Yeah,
cross-border payments, 156 trillion.
Yeah, the B2B transaction space in North America is 30 trillion. So, I mean, I think what we're all doing is basically the same thing as you. I mean, these have all been very private transactions up until this point, and what we're doing is basically origination, and because they're on blockchain, because they're verifiable, you're making them investable. So that's really what's happening. Is you're taking these, $30 trillion worth of B2B transactions and making them investable because they're now on chain and they're verifiable. So I think we're all essentially doing the same thing.
Yeah, I mean, I think these worlds definitely have to collapse, TradFi and DeFi, or else everybody in this panel is just going to be wrong, right? And because credit is an institutional product at the end of the day, right? I mean, you need institutional capital. I think at Valinor, we're very focused on trying to bridge that. And so I think the end state, like what Karn is saying, is that the stuff is going to be, we're going to stop using these delineations, I think, at some point.
All right, well, we're at the end of our time here. Thank you all for this very, very educational conversation. And I hope everyone is enjoying the summit, and have a great rest of your day.
Thank you.